So that sick animal that and I'm not gonna get my hopes up. All right, I'm not gonna get my hopes up. That sick animal is actually eating food this morning. I'm actually looking at him right now, and he's actually eating. He's actually eating, and so I gave him that shot of florfenicol 2.5 days ago, and I was reading a bunch of papers, or not a bunch of papers, but I was reading up on different antibiotics. I was reading up on different antibiotics, and I actually, I don't know if I saved this paper or not, but I read this paper about the dosage of florfenicol, and when utilized at the correct dosage, the duration at which the antibiotics last for. They have some kind of a unit of measurement where they will take a look at the bacteria and then determine at what concentration of florfenicol will more than 90% of the bacteria die. So that's how they measure it, when at what concentration of florfenicol will cause death to more than 90% of the bacteria population. And they did, this paper determined that when given florfenicol at the proper dosage rate, florfenicol will effectively kill more than 90% of the bacteria for about just somewhere between 60 and 65 hours, something like that. And so I read that paper, and because I was taking, I was looking at because I'm looking at when should I give my animal more antibiotics? If I consider it necessary, when should I give the animal more antibiotics? And so I was looking into the duration of the effect of florfenicol, and that's ultimately the information that I found. And this information that I found, I effectively got it. Not effectively. I got it from reading a published scientific paper. All right, this was not the opinion of Billy Joe Bob. This was not my opinion. All right, this was a study done on the duration of florfenicol, the effects of florfenicol and the duration, and the way they measured it was, at what concentration of florfenicol will more than 90% of the bacteria in this experiment, when at what concentration of florfenicol will 90% or more of the bacteria die, and how long will that duration last for? And they determined it somewhere between 60 and 65 hours. And I actually gave the animal the antibiotics about 60 hours ago. Well, not about 60, maybe it was about 58 hours ago, 57 hours ago. And so, I mean, the florfenicol should have been running through his body, right? It should have been running through his body very, very well over the last 2.5 days. And also yesterday, I didn't, because I read that paper, and I determined that I'm not going to give him any more antibiotics, because I've already given him enough antibiotics to effectively, give him a good dose, right? I've determined, from reading the information, that the animal has enough antibiotics in his system to effectively neutralize the bacteria, if that is the problem. And so I didn't give him any more antibiotics, and I gave him another shot of Banamine. I did give him another shot of Banamine yesterday, and that really seemed to help him. And so I gave him another shot of Banamine, but I did not give him another shot of antibiotics. And this morning he's actually standing there eating food, and so that's that's a visual sign of improvement. And from my understanding, the florfenicol should effectively be killing bacteria in his system until about today afternoon. All right, it's up until about maybe about 12, 2 or 12, 1, 2, 3 o'clock, something like that. And I'm gonna go and take a look at him, and if it looks like he needs, but I've already given him, a hefty dose. I gave him enrofloxacin. I gave him 2 shots of Banamine. I gave him florfenicol. And and when he first got here, I gave him a macrolide. I'm not sure if I gave him macrocin or Zactran, but I gave him one or the other. And I have him on antibiotics very, very, very thoroughly. And but that's the thing. Usually when things like this happen, it's almost always because I brought home a sick animal. I'm not, whatever, me, I'm not looking to, float my own boat, but it's almost always because I brought home a sick animal, and then that sick animal got another animal sick. And for whatever reason, when the illness spreads, it becomes worse. That's one of the things, that is, when the illness spreads, it becomes worse. And so, but that's almost, and God knows it. I know it. My mama knows it. All right, even my mama knows it. This animal that I brought home, she was sick when I first brought her home. She had a lot of problems, and she ended up dying. And I was actually gonna go and I was like, the animal's still dead in the preconditioning pen, and I was gonna get him moved over to the back this morning, because I thought maybe the other animal was gonna be dead too, and so I was gonna move them both back at the same time. And I'm gonna give it 24 more hours, and then I'm gonna go ahead and move the animal to the back. I'm gonna see if the animal makes it, if the other animal makes it through the next 24 hours. But he's actually standing at the bunk right now eating food, and so that is a very, very, very good sign that he's feeling a little bit better. All right, my whole thing about the animals is if they're not eating, that's a very big problem. All right, if they're not eating, then something is not right. And the animal's actually standing there at the bunk right now eating food. All right, and I haven't seen him, and just to put things in perspective, over the last 2 days, I've actually been hand feeding him grain. I've been physically opening his mouth and putting grain in his mouth. I put about 3 or 4 or 5 handfuls of grain in his mouth, because you really don't want to be in a situation. Cattle, their intestinal system, in terms of how they digest food, is fundamentally different than a human being. Like, as a human being, if you eat grass, you're not going to be able to obtain any calories. So cattle, their gut is effectively a large fermentation vat. You can think about it as like a large barrel for fermentation. And there's bacteria in their gut that will digest the food form, and then when they will then go and then the rest of their body will absorb the nutrients. So the bacteria will digest the nutrient, or will digest the food form. And cattle can actually even obtain calories from eating fiber. I don't know if you understand, or if you know this, but this is another just kind of a random fact. Human beings do not digest fiber. All right, fiber, we do not obtain calories from fiber. Human beings obtain calories from fat, carbohydrates, and protein. But cattle can also digest fiber. If cattle eat fiber, they will actually obtain calories from it. So that's when they eat plant material, they collect energy. All right, and so if the rumen of the animal shuts down, it becomes very difficult to take care of the animal. It becomes very difficult to have that animal improve. All right, it's very difficult. The rumen has a pH and has all this bacteria in it, and if it shuts down, then it becomes very difficult to take care of that animal. It becomes very difficult to have that animal do better. And the animal is actually standing at the bunk right now eating food, and so I'm very happy about that. I don't know if he's gonna make it. I don't know if he's gonna make it. All right, I'm not getting my hopes up. I still think that, but I mean, and I was reading on florfenicol, and the antibiotics should be running through his system. I gave him the antibiotics at 9:30 p.m. 2 days ago. I gave him the antibiotics at 9:30 p.m. And so the antibiotics should effectively be running through his system until about maybe about 2 or 3 p.m. today. And so when I get back home from work today, I'll take a look at him, and I'll determine what do I need to do. But I did give him another shot of Banamine yesterday. And let me just go through a question real fast, and we'll determine this. Right, I've always said that if cash is not the only way to have money. It's all effectively the same thing. When you look at my situation, this is ultimately what I call my decision-making process. Right? How do I come to the decisions that I make? So when I take a look at my situation, all right, like and if you don't understand money, a very realistic way to look at it is to look at it in terms of something else other than cash. Okay, cash is the most ridiculous way to have money. If you're holding on to cash, you're going to get taxed a lot. I mean, it's not a good situation to be in. I mean, what are you going to do? Are you going to look at it? It's not going to do anything for you. There's a lot of inflation. I actually think that inflation is, inflation effectively, my whole idea about the global, in terms of the larger economic system, is that unless something legitimately happens that reduces the monetary base, right? I talk about this all the time. I've been talking about this in terms of the global economy, in terms of the overall economy. Unless something happens that reduces the overall monetary base, something needs to happen that reduces the overall money supply. All right, that's what needs to happen. All right, and if something like that does not happen, then we're effectively just going to continue to see inflation. And with President Trump in the office, inflation is probably not going to be as bad as it was with Biden. It probably isn't. President Trump is doing a lot of things that's going to reduce inflation. Reducing government spending is going to reduce inflation. If the government is borrowing money from the central bank, which is technically, I guess, more or less itself. I mean, the central bank is not a political thing. The central bank is not a whatever. It's not a right. It's not a part of the government. It's a private institution. But I mean, if the government is borrowing money from the central bank, then it's more or less whatever, hand in hand. It's all more or less the same thing. The central bank, I don't believe in the central bank. It's kind of a communist idea. Not kind of a communist. It is a very communist idea. I mean, the idea that, if the government decides to do so, or not even why do I keep calling the central bank the government? The central bank is not a political institution. All right, the central bank is a private institution, and if they decide that they want to lower interest rates and pump trillions of dollars into the economy, then they can just do so. That's not good. Okay, that's not good. That's not but on the other hand, but then again, in terms of a broader economic sense, I mean, it does do a lot in terms of benefiting the overall average person. Because let's think about it in terms of a reality sense. Like, let's say that we all went back in time 100 years. Do you legitimately think it would be easier to make money 100 years ago? Do you legitimately think that? Like, let's say we went back 100 years. All right, do you legitimately think it would be easier to make money 100 years ago? If you said yes, you're an idiot. 100 years ago, 100 years ago, that would have been like your grandparents. All right, if you legitimately said yes, then you're an idiot. All right, making money is substantially easier today than it was even 50 years ago. Substantially easier. It's not even comparable. All right, if you legitimately believe, oh my God, if I was just born 100 years ago, I could have made it, you're an idiot. Making money 100 years ago was not easier. It was way harder. All right, there's no comparison. Making money 50 years ago was way harder. There is no comparison. All right, it's not even comparable. All right, making money nowadays is very, very easy compared to what it was, even 50 years ago. Very easy. All right, you have access to like unlimited information. Did your parents have access to the internet? Right? 50 years ago, would you even have access, to the internet? You wouldn't even have access. You wouldn't even, making money today is substantially easier than it was 50 years ago. Substantially easier. If you're effectively in, like right now, you have access to like the world's information for free. Like, and I'm not saying I'm a saint, but I mean, me, I wanted to know how long florfenicol was going to last in the animal's body. I gave my animal a dose of florfenicol, and I wanted to know what was the duration. Right? How do I think about this? I want to take a look at it. I want to go read about this. I want to learn about this. I just got on my phone and looked it up. Boom. We used a unit of measurement. We had this bacteria, and we applied florfenicol at the given dosage, and then the unit of measurement we used was effectively if 90% of the bacteria or more died, then we considered it a success. And how long did that duration last for? About 60 to 65 hours at the labeled dose. Very simple. I looked it up. It took me 2 minutes. It took me, maybe not 2 minutes, it took me like 5 minutes. Okay, my florfenicol is going to last about 60 to 65 hours. I gave the animal a dose 40 hours ago. well, then the florfenicol should be good for the next 20-25 hours. So I'm not going to give my animal any more antibiotics. Instead, I'm going to give him a shot of Banamine. Boom, that's it. Very simple. All right, it's not difficult. It's not like some complex thing. You just go on the internet and you look it up. Where do I look up information? Google Scholar. It's free. You don't have to pay anything. All right, boom, there's the information. Published scientific paper, good to go. All right, and let's take a look at my business. All right, let's take a look at the business. Think about it in terms of a common sense equation. I talk about this all the time. If my business is making a net positive return, then I don't even worry about it anymore. I don't. All right, and actually, if we're going to talk about the broader U.S. economy and everything, and the S&P 500 is down by about 8%, 7%, something like that, and I've always said that the whole thing is that you're effectively not going to know who you are until you get squeezed. Okay, you find out who you are when you encounter a difficult situation. Because if you're in a situation where you have convinced yourself that your life is going okay, oh well, I'm fine just the way I am. If you're in that situation, you're not effectively going to know who you are. You're not. All right, but when your life becomes difficult, you will then find out who you are. That's how I've seen it work out. So right now, the S&P 500 is down by about 7 or 8%. All right, well, actually, and then, but let's talk about it. My farm too, right? I've lost a couple of animals, right? The S&P is down 7 or 8%, right? Is the overall fundamentals good? Are the overall fundamentals still good? Yes, they are. Okay, yes, they are. Let's take a look at it in terms of my business. And actually, I actually ended up purchasing this week I actually brought home about $2,600, and then I went and bought 2 bottles of antibiotics, and those 2 bottles of antibiotics cost me about $365. It was $263.50 for the Zactran, and then it was $103 for the florfenicol, and I brought home a check for it was like $25.56 or something. And so I ended up having I got about 2,180 or 2,400, something like that, dollars left over. All right, this week I actually liquidated animals, and I only brought home 4 animals, and I ended up bringing home cash. All right, I brought home about $2,500, $2,600 cash. All right, so let's take a look at my situation. And if you don't understand money, think about it in terms of cattle. This month, I will liquidate about 8 animals, and I will make enough money to buy 14. All right, I'll make enough money to buy about 14. That's effectively, and I've already bought the antibiotics, okay? I've already bought the antibiotics. I still have about $2,200 left over. All right, I've already bought the antibiotics. So I'm not going to be buying anything at all for the entire month. So let's take a look, and the animals are actually eating substantially less grain. I'm actually only feeding them about 10 or 12 buckets a day, and I could probably even reduce that. They're eating very slowly, okay? I'm giving them about 10 or 12 buckets a day. And if I feed 20 buckets a day, the grain lasts me about a month. All right, so the grain is going to last me until probably about April, and a lot of these animals are actually going to be going over to the lease property. The bigger animals are actually going to be going over to the lease property to eat grass. All right, and so that's going to even reduce the amount of grain that I'm feeding the animals even more. So let's take a look at the situation. So let's just take a look at the business. Okay, let's take a look at the business. If I sold 8 animals and I made enough money to buy 14, that's effectively what happens, right? I mean, that's effectively what happens. And overall, whatever. I sold 8 and I made enough money to buy 14, and I lost 3. Is my business still profitable? Right? It's a very simple question. Very simple. Yes, it is still profitable. If it's still profitable, then I don't care what it costs. All right, if I went and I liquidated 3 of my bigger animals right now, whatever, I bring home whatever, right? I bring home a couple, whatever, right? Yes, my business is still profitable. All right, substantially profitable. If you actually take a look at it in terms of an overall situation, if you consider the entire balance sheet as a whole, my business is still effectively, is still effectively growing by about 10% a month. and I'm not using any leverage. I'm not using any leverage, and my business is still effectively growing by about 10% a month. All right, that's the reality situation, right? That it is what it is. That's what it's an objective truth. All right, I've always said, if you have a bunch, nobody cares about opinions. Your opinions, they're probably even wrong. They're probably 180 degrees in the wrong direction. All right, nobody cares about opinions. You have to, me, when I take a look at things, I take a look at them for what they are. What am I looking at? I'm selling 8 animals. I'll probably, I would reasonably anticipate, I'm not just gonna, la la land journey. I reasonably anticipate that I will make enough money to buy 14 animals. And even right now, this week I brought home about $2,300, I brought home $2,556 or something like that dollars, and I purchased $365 worth of antibiotics. I still have like $2,200 left over. Reasonably, I could buy 2.5 animals with that money. All right, and so, I'm still liquidating 4 animals, later this month. The animals are good to go. I'm taking a look at them. They're about 650. The body conditioning score is good. I'm going to make some money on these animals. And when I liquidate these 4 animals, I will probably buy 7. So overall, I'm in the net positive about 3 animals for the month. Then my business is still effectively growing by 10% or so a month. And I'm not using any leverage. Then it doesn't cost me anything. If my business is producing a positive return, and that net positive return is pretty substantial. Even right now, it's about 5,000. All right, 4,000, 5,000. I would say, and I told my mama 4,000. I told my mama 4,000. All right, even after I pay for everything and I do everything, I would anticipate that, even after everything, I still have $4,000 left over. I still do, even after everything. If I took that $4,000 and I bought more cattle with it, I could probably buy, 4 or 5 cattle. And in all honesty, and if I did that, because here's the situation that I'm in. I'm not in a situation where I'm looking to scrape money off of my business forever, right? That's not the plan. All right, I'm looking to grow my business. I'm not going to sit here and just hold on to some worthless amount of cash. And at the end of the day, I also have equity in the herd, right? I still have equity in the herd. And I'm producing this positive return. So let's take a look at it. If I had $4,000, I would not sit there and go, oh my God, I got $4,000. I would take that money and I would directly convert it into a tax deductible asset that I can knowledgeably appreciate at its reasonable appraisal value, right? Very fair. What could I buy? I could probably buy 4 animals, and I could buy enough fertilizer to fertilize enough grass to feed all 4 animals. That's what I could buy with the money, right? Very, very, very easy. If I brought home 4 animals and I took care of those 4 animals, and I legitimately was in a situation where I was like, you know what, I feel like I need more cash, I wouldn't go and sell the small animal. I would sell one of my biggest ones. And if I sold 4 of my biggest ones, realistically, in this situation, I would not be sitting here with $4,000 cash. I would be sitting here with like $6,500. But that's the thing about me, is that I would not, what am I going to do with, just holding on to massive sums of cash? What's the point of that? It's not going to do anything. It's not going to do, number one, it's not going to do anything. I would rather have my investments. If I have an opportunity to have a good investment, I would take the good investment over cash. All right, that's the big idea. All right, and the S&P 500, I love the S&P 500, right? The S&P 500 is a phenomenal asset. I love the S&P 500. The S&P 500 is down by about 7 or 8%. I've taken a look at the P&E ratio. The P&E ratio is sitting at about 25.8. I don't really see any sort of a big financial problem happening. I don't, not yet. Are they going to happen? Yes, they do happen. They happen all the time. But I don't see it happening right now. Okay, I don't see it happening right now. There's, if I legitimately see some kind of a massive financial problem, then I will tell you. All right, if I see it, I will tell you. But I don't see it right now. If anything, I actually think that the biggest problem is going to be inflation. That's what I think. Will President Trump slow the amount of inflation? Sure, he will. He probably will. But there will still continue to be inflation. All right, there will still continue to be inflation. There will continue to be inflation until the monetary base is reduced in terms of the ratio between the monetary base and the number of assets. All right, that's effectively the big idea. And how did I describe this idea? How I see the economy effectively, rolling forward is, imagine that you have a can of Coca-Cola right now and it's $1. That can of Coca-Cola that exact same can of Coca-Cola, will probably be about $1.25 or $1.50 in 10 years. It probably will. That's what I see happening. And why do I see that happening? Because the monetary base is expanding faster than the growth of assets. That's why, right? Very simple concept. It's not some difficult thing, right? It's not some difficult thing. It's not difficult. All right. And if you have a larger amount of money chasing the same asset, then that money will drive the price of that asset higher. Very simple, right? Very simple, not complicated. All right, and the S&P 500 right now, if it falls maybe another, if the S&P 500 falls to a P/E ratio of about 23, I would actually be willing to leverage some money into it. Not a lot, but and actually, I'll actually take a picture of a option contract that I purchased yesterday. I actually purchased an option contract on Pepsi Cola. I purchased an option on Pepsi. I purchased a call option on Pepsi. And, I made a couple hundred. Well, I didn't make any money on it. It's up a couple $100, but the reason that I purchased Pepsi Cola and the reason that I leveraged for it instead of just purchasing the stock, was because the price, the P/E ratio of Pepsi Cola is sitting at about 17.9. The P/E ratio of Pepsi Cola is sitting at about 17.9, and their earnings have been pretty solid over the last 3 or 4 earnings reports. Their earnings have been going up steadily over like the last three earnings reports, and the price of the stock has actually been going down. So that's kind of fundamentally something is kind of wonky with that, and so I purchased a call contract, and the price of Pepsi Cola in terms of the ratio to earnings, right? I talk about this in terms of when I look at a company, when I look at a business, I look at the product that the business produces, right? I look at the product. What is the product? And then I take a look at the company in terms of the multiple of the earnings, right? I talk about this all the time. I don't go, right? This company, that I don't do that. What do? I take a look at the company, I take a look at the product, and then I take a look at the evaluation of the company's overall equity via the earnings multiple, the P/E ratio. That's how I do it. And so I took a look at the company. The earnings have been going up for maybe three earnings cycles. 3 earnings reports. The earnings have been going up, and the price of the stock has been going down. Pepsi is a very solid company. I mean, it's a very solid company. It's effectively just another Coca-Cola. When I take a look at the Pepsi product, I can tell that Pepsi makes money. Okay, I can tell. Pepsi makes a lot of money. I can tell when I look at the product. It's effectively just another Coca-Cola. It's effectively just a can with water in it and some syrup. All right, Pepsi makes money. I can tell when I look at the company. It doesn't take a rocket scientist to determine whether or not a company is making money. It doesn't. Pepsi makes a lot of money. Okay, Pepsi makes a lot of money. I took a look at their stock. The P/E ratio sitting at about 17.9. The earnings reports have been good for the last three earnings reports. The earnings have actually been going up, and the price of the stock has actually gone down. So something is not right. I believe that Pepsi Cola, I would say that Pepsi is probably going to be I would say that a reasonable price estimate for me in terms of Pepsi is about 165, 170. And so I purchased a call contract, and I don't just go out and buy random call contracts. Okay, the reason that I purchased the call contract was because I believed that it was good in terms of a leverage situation, because the overall standings as of today. All right, I took a look at the entire situation and I determined that I'm going to buy a call contract on it. And the S&P 500 is actually borderline getting close enough to where I actually would be, if the S&P 500 falls another 5% or so, falls another 3 to 5%, I would actually be willing to leverage for the stock. I would be willing to leverage for it. All right, that's just, because, me, I love the S&P 500. And think about the S&P 500 like this. The S&P 500 is a collection of the 500 biggest companies in America. That's what it is, right? You're buying a small equity stake in the 500 biggest companies in America. That's what you're doing, right? So if, think about it, and America is the number one economy in the world by a long shot. The number one. It doesn't get any better than America. It doesn't. If you legitimately think that there is an economy that is better than America, if you think that there is a possible outcome, or, if you legitimately think that there is an economy that is better than America, you're an idiot. There is no economy that is better than America's. All right. If you take a look at the average quality of life, even if you're poor in America, your quality of life is probably substantially better than if you're poor in a different, and I'm not talking about broke, I'm talking about legitimately poor. All right, chances are you're not living in some trash dump. Chances are you're not, you don't have access to water. Chances are you still have access to water. You still probably have some sort of a shelter. You probably have some sort of food, right? I mean, you're not like starving out in the bush. All right, even if you're in economic not good, America is the number one economy in the world by a long shot. It doesn't get any better. And so think about the S&P 500 as you're buying a piece of the biggest, most incredible economy on the entire planet. You are legitimately buying a small piece of the biggest economy on the entire planet, the best economy on the entire planet. That's what you're doing when you buy the S&P 500. That's what you're doing. It's a wonderful investment. Think about it in terms of a fundamental idea. Think about it in terms of a bigger, broader idea. You are buying a small portion of the biggest, most incredible economy on the entire planet. It doesn't get any better. That's what you're buying. That's what you're buying when you're buying the S&P 500. And now imagine that you got a discount on this stock. And I already talked about me when I evaluate companies and I evaluate scenarios. What do I look for? I look for the future. What do I see the earnings of the company doing in the future? That's what I look at, right? That's what I look at. I don't care about the price of any asset. I talk about this. The price of an asset is irrelevant. Is borderline irrelevant. I mean, it's like, what asset are we talking about? Are we talking about real estate? Are we talking about businesses? Are we talking about commodities? What are we talking about? All right, what are we talking about? What asset are we talking about? If we're talking about a business, businesses are all evaluated the exact same way. They're all evaluated the exact same way. It doesn't matter. They're all the same. You take a multiple of the earnings. That's how you determine the evaluation of a business. So it doesn't matter what asset I'm looking at. I don't care about the price. Money, the price does not matter. It doesn't. All right, it doesn't. The price does not matter. What matters more on a more realistic sense is, do you understand the asset that you're purchasing, and do you have a reasonable idea for why it will appreciate in the future? Do you have? That's more important than looking at the price. All companies are evaluated the exact same way. The P/E ratio. So if I take a look at the S&P 500 right now, the P/E ratio is at about 24.7 or something like that, 25, something like that. And I actually think that the economy is going to do good. I actually think that the overall U.S. economy, it may not do good, but there is still going to be inflation. There is still going to be inflation. President Trump is doing a lot of things to reduce the amount of inflation. Do I think that we're going to have deflation? No, I don't. I think that we're going to still continue to have inflation, and it's not going to be as bad as it was with Biden. Biden, I mean, they spent a lot of money. I don't know. I don't even know what was going on. They were sending like hundreds of billions of dollars to Ukraine, and Biden spent a lot of money. I don't even know what happened, but the monetary base exploded under Biden. All right, and you can go and take a look at it in terms of just information, M2 money supply. You can go and take a look at it. Do I think that inflation is going to go away? No, I don't. Inflation is, the amount of inflation that we have is probably going to be lowered, but we will still be facing inflation. We probably will. All right, the economy is going to do better under Trump than it did Biden. I would anticipate. I think that the economy is going to do good, and Trump's going to do a lot of things to benefit America. I really do. Right? These tariffs are a phenomenal idea. Reducing government spending is a phenomenal idea. There are a lot of good things going on. But do I think that the economy is going to start deflating? No, I don't think that the economy is going to start deflating. When we start talking about deflation, we're talking about a reduction in the overall money supply. That's what we're talking about. And I don't think that that's going to happen. And so when I take a look at the situation, and the S&P 500 is sitting at a 25 P&E ratio, it's down from about 28.7 to about 25. All right. And, if the P&E ratio of the stock falls to 23, and I believe that the economy is going to do better in the future, that means that the 23 will actually, be lowered even more, just because the earnings of the overall companies that are involved are actually going to go higher, right? Very simple. If the companies in America make more money, then the P&E ratio goes down because the earnings go up, right? To keep the same P&E ratio, the price of the stock, the evaluation of the company would have to go higher. Very simple, right? Very simple. It's not difficult. And if you're having difficulty understanding that, then go back 10 seconds. Go back 10 seconds and then listen to it again and then write it down. All right, write it down. I don't know. It's not a difficult concept. When you have a company and that company is making money, the evaluation of that company, the value of that company is a multiple of the money that it makes. Write that down. All right, write that down. That is good information. All right, write it down. The valuation of the company is a multiple of the money that it makes. That's what it is. All right, and if a company looks like it's going to do better in the future, substantially better in the future, then the multiple goes higher. That it is what it is. That's just objective information. All right, and so I actually have a call contract on Pepsi right now, and I bought it yesterday, and I'll take a picture of my trade. If the price of the S&P 500, falls maybe another 3 to 5%, I would actually be willing to leverage into the stock. I would not just buy shares. I would leverage into the stock. All right, and I'm not saying whatever, I'm not saying I'm a guru, and at the end of the day, it's just whatever, right? I mean, but that's what I'm doing. In this whole situation, what was it? I forgot. I got this helicopter going over me, and I forgot. I forgot. This helicopter went over my head, and I forgot. Oh yeah, the bond market. The whole thing about me holding, I purchased this bond and I lost money. But the thing about this bond was that if I had just sold when my bond, but I wasn't really paying attention to the stock. I didn't really care about my stock portfolio. I was like, whatever. It's just, it's whatever, and I'm just holding it as an insurance policy. And but if I had actually sold that bond when it, because it dipped down and then it actually went borderline even again. And if I had sold it and then purchased an option contract for further out with the same amount of money, if I had sold the option contract and just bought myself more time, I would have actually made money on that trade. But I wasn't really paying attention to I was holding on to the bond contract as an insurance policy for my overall business because of the market fundamentals. I mean, I didn't really I wasn't really like, oh my god, I'm gonna trade, so I'm gonna trade stocks. But the bond market, the yield on the yield on the long-term bond has actually dropped enough to actually invert the curve. All right, if you go on the internet right now and you you look up inverted bond yields, if you look up inverted bond yields, you'll actually find that inverted bond yields are a sign of a rough economy. All right, interest rates on the short end are too high and interest rates on the long end are too low, effectively, and that's not good for the economy. Do I think that these conditions, but I mean, but yields fell substantially on the long end of the curve. Okay, yields fell substantially on the long end of the curve, and if I had actually held, because I bought the option contract, I wasn't really even looking at anything. I just felt like, I didn't feel like I reasonably deduced that if I was going to hold an insurance policy against my business, that I would hold an insurance policy by purchasing a call contract on the bonds, on the long-term bonds, 20+ year treasury bonds. That's what I reasonably determined. All right, and and when I did that was my ultimate reason for why I purchased that contract. I wasn't really whatever. That's why I did it. And after I did that, bond prices actually bond yields actually went up. Interest rates actually went up, but so did the price of cattle. So I didn't really care about it. The price of cattle was also going up. I was losing money on my insurance policy, but I was holding on to it like an insurance policy. I didn't care. And but if I did care more and I was taking a look more closely at my stock portfolio, I would have actually found that at one point, actually at 2 or 3 different points, my bond contract had just about broken even. Maybe I had lost $30 and I could have sold the bond contract and actually just bought myself more time. And if I had bought more time, then I would, I could have bought a bond contract for longer out into the future. And if I had done that, I would have actually made money. All right, yields are actually inverted as of today. Or I don't know if as of today, but they actually inverted. And I was actually saying, and I actually said a week or two before that it happened, I was actually saying I've been watching the bond market, and the bond market looks like it's about to go on a bull run. And then about a week or two later, the yield curve actually inverted. And I don't know if it's still inverted. I don't know. And I said whatever. Well, whatever. I lost. It was $1,000. I don't care about $1,000. I was ultimately holding on to it as an insurance policy for my cattle, right? And and the price of cattle skyrocketed, or not skyrocketed, but went up. It went up enough to where I didn't care, and then whatever. So but that happened. All right, that happened. But I bought a call contract on Pepsi, and if the price of the S&P falls another 3 to 5%, I would actually be willing to leverage for the stock. I wouldn't just buy shares. I would actually leverage for the stock. All right, and so I'll take a picture of my trade and I'll post it as the picture for this video. And that's it for me today, YouTube. Y'all have a good one.